call, Sarah, it seems as though you think this is a smart move, get in ahead of Uber. How do you think the diversification of the business is between Lyft and Uber? Because Lyft is very much US-centric.
Absolutely. I think Lyft is very much US-centric, US and Canada, and they're also very much transporting people-centric. Uber has a much more diversified business with Uber Eats, with their trucking business, and they're much more globally diversified. And so I think there's a lot more information that can be gleaned from Lyft's revenue numbers about the health of the business. With Uber, it's often hard to separate what's driving revenue growth and what's driving profits.
Interesting. So it might be easier for investors to get on board with this investment. What I thought was fascinating in your notes was that you thought Lyft should do everything it can to include drivers in its IPO and post-IPO ownership. Explain why that's important, how that can be a real differentiator from Uber.
Well, if you've taken an Uber or a Lyft, you've noticed that most drivers drive for multiple platforms. I think a big part of what's going to drive success in the future is being able to convince drivers to spend more hours on your platform. So Lyft wants drivers to drive exclusively or predominantly on their platform. Uber wants the same. You know, if I have stock in Lyft and I don't have stock in Uber, I'm much more likely to put my hours into Lyft. And so this way of aligning, like, provider incentives with platforms, that's one reason. Another reason is that it has the company being perceived as sharing the wealth. A third important reason could be it simply makes good business sense in terms of costs. If the drivers have stock options, then they're probably going to be willing to accept a lower per hour pay rate.
Yeah, and obviously in the details we're hearing that a cash bonus is going to be offered to the drivers. Bonuses will range from $1,000 to $10,000 for drivers of good standing to be able to get in on this IPO. Fascinating way to win over the drivers. What about investors? I'm interested in general about the control of the founders. Do we learn anything about the way in which they might hold control of the company and whether that's still a good thing for the investors who want to get in? Because it's sometimes not been well liked, certainly when we're looking at the Snapchat IPO, for example.
Yeah, I know. It's a tough question because, if you look at a company like Amazon, tightly controlled by the founder who has spent 20 years losing money to build a position of dominance. So that kind of founder-led control can, in fact, lead to long-run success. Because I firmly believe that both Uber and Lyft should not be chasing short-term profits. What they should be doing instead is changing behaviors and going after market share of the broader transportation market. I mean, you add up how much Uber and Lyft are earning in the United States today, it's probably just 1% of what people are spending on transportation. And so really, it's all about top-line growth, changing behaviors. And for that, to be able to lose money, to change behaviors, and gain market share, the founder control may actually be central to the eventual success of the business.
That's interesting, especially when you point out how much room there is for growth. Very quickly here, is there room for Lyft, for Uber to both be companies that have $100 billion or more in valuation?
Absolutely. I mean, Scarlet, I think that, I think there are going to be multiple companies in this space that have valuations approaching not just $100 billion, but close to $1 trillion. And the reason I believe this is that globally, the transportation market is a multi-trillion-dollar market. It's more than 10 times bigger than the global advertising market, which is supporting Facebook and Google's multi-hundred billion-dollar valuation. So, companies that can capture a good single-digit percentage or even a double-digit percentage of the global transportation markets, I can easily see them being trillion-dollar companies or at least hundreds of billions of dollars. So at 20 to 25 billion, I think Lyft is a steal.